Okay, this is the chart for Monday, June 4th, and this is the daily money-making setups from the S&P E-mini using the 1500 tick bar chart in processtrading.com right edge trading system. Now today we can show you the setups that you had. Clearly, if you look at the chart, you can see, well, we would like to get in here. We'd like to go short here. This was pretty much where it just congested. There's consolidation. It went laterally. There's a couple good trades. You're not going to find any trend trades really because this wasn't a trending day. So they're going to be discretionary trades, and maybe I'll talk about a couple of them maybe here and here, but I want to talk about something else in relationship to finding the money-making setups. Now, who makes money in trading the E-mini? Well, the professionals make money, and the unskilled traders lose money. So generally, there's three groups or three categories of traders that we look at over at processtrading.com. There's the professionals. Those are the ones you want to follow, and because if they're making money, you want to make money right along with them. Then there's the unskilled traders that will invariably get wrong-footed and trade at the wrong times. So you want to see what they're doing as well. And then there's, the market makers, the high-frequency traders, etc. Everybody else falls into that third group. So on a day like today, when it isn't trending, there aren't a lot of reversals, there's not big swings, the volatility is low, we would like to know what those groups are doing. And there's a way that we do that. So let me turn on the indicator for that over here and start that. Okay, so this is the indicator that allows us to follow the professionals. In this case, the blue bars are the professionals. The yellow bars are the less skilled traders, and the green and all the red bars, all the other bars are the whole other group of the markets of high frequency traders, market makers, institutional, etc., etc., etc. So let's just follow the professionals here for a little bit and see how they help facilitate our reading of the markets. Well, here's where the day started out over here, not the opening. The opening didn't start until right around, let's see, where is that, 9:05, 9:20. The opening didn't start until over here. This is the overnight. And so we saw the overnight going up and up, a couple of blue professional bars. And then we see the blue professional bars, especially it crosses the stop exit line. That's this dash line here. And so it's a sign that they're going to come down. Plus we got our trending dots here that signal that they could be coming down. So we see the blue professional bars coming down. And they are going to come down to a point where it has been profitable for them, and then it's going to go in the other direction. So in this case, it came up to the contrarian band or the contraband. This is a contraband to go short, this is a contraband to go long. They took it up to the contrarian trade point, and then they reversed the direction of their trades. These are the professionals now. Now they've got it up to this point. Now they're going to reap their profits and go short. So here they are going short all the way down to here. Now you want to pay particular attention to this because the question will be, well, what is the difference between this point here that is just broken support and this point here that is just barely broken support? So we'll talk about that in a bit. But here we see that the reverses, and right here, it's very difficult to see, right here is your professional bar that is broken across the stop exit line. So if you happen to take that short trade and you got in here according to the processtrading.com trade management system, and you took it down here, if you didn't get out here, which you might have when you notice that here's the last professional bar on the downside, then you get a timing alert dot, and over here the trend breaks the stop exit line, and also the professional bar is right here. So you would have captured your profits at the very least in that area right there. However, this is the professional bar then going long. These were going short, and now it reverses direction. It goes long, and you can see we have all the other groups going in, and here is the less skilled traders coming in until the less skilled traders are up at the top thinking, oh, well, this is going to be a big trending day, and it's going to trend up, and they trend up. And sure enough, that's right then when the professionals then start taking it down again and take it down to here. Now, for us to take this trade here, which we would have only taken during trading hours, we would have only taken this trade or both. But the way that we would have done this would not be classically trend trading according to the right edge trading system, because this section of the process trading VWAP right here is gray. So we can treat this, though, as a discretionary trade and still apply the same rules that if we want to, as though it were the trade management of a trend trade. And so we'd look at the high and place our order entry 2 points above that, which would get us in right at this area here. Then we just follow our profits up until it gets up here. And we see at this point here, we see a timing alert dot. We see that the price has come close to the contraband or the contrarian trade area. And we also see right here, here is a blue professional bar to the downside. It's just went below the stop exit line. So and now we have a strong reason to believe that they're going to take it down again. So we would be exiting for sure right here if we didn't right at the apex here. And what happens with all these non-skilled traders then is that they actually get caught going down this way as the professional traders. They bought in at the high at the exact wrong time right here, and then they have to get out and they have to cover, and they have to give back any profits that they made. So at this point here, we would be able to take the trade down to the short side following our contrarian trade management rules over on processtrading.com. Now, the question was really, why is this area different than this area here, because they both have timing alert dots and they just broken below the process trading VWAP line or the support line. Well, over here on this one, you can see right here at this point here, right where that blue bar is, you see momentum cross up through the sentiment line of the sentiment oscillator down here. You also see on the Intergy, you see a demand starting to come in, and you see on the short-term trend where it starts to cross up over the pullback line. So, but when you get over here, you see that this had a professional bar here. You don't see any professional bars here to the upside. And also, when you look down at your discretionary indicators, even though this is trying to take it to the upside, trying to take a long, the energy shows supply is coming in. The sentiment or conviction is sloped down and continuing down. As we've mentioned before, the slope of that conviction is very important. So there's a clear divergence there between the direction of price and the slope of the conviction. So we know that this is not a truly well-developed trade to the upside, because the conviction shows no strength to the upside. It shows just the opposite, as does the short-term trend, which at this point here had come below it. Now, it did come up to the pullback line, and you can see that here. That's why it's called the pullback line. It came up to the pullback line and then reversed and went back down. And here it is right there. And you can see that there's those professional bars finishing out this down leg right here until it comes in here. And there's the first professional bar crossing the stop exit line, taking it up to here. So all in all, not a really great trading day because this was a discretionary trade, and this was a discretionary trade also. Now, it is a good trading day because you have all the signals and the indicators, so you know which directions are real as far as the momentum and the conviction in the trades. But the point here is, on these types of days, if you're going to trade, that you want to follow the professionals. And you'll see that with the blue bars. And then you also want to watch what the unskilled traders are doing, because they will invariably end up getting wrong-footed, like here at the high, and over here at the high, and over here at the high. So you just follow the professionals, let them lead the way. You still want to rely, if it's a discretionary trade, rely on the discretionary indicators. As long as they're all lined up, should be in good shape. That's why you take this trade. That's why you would not take this trade as a discretionary trade. So that's basically it. Oh, one more thing that I thought I would mention here. This has to do with the short-term trend oscillator. This oscillator, as you would be aware, actually forms channels, because these are not hard and fast upper and lower bounds that are attached to any strict measurement as the sentiment oscillator is. The sentiment oscillator, these are firm, where the upper bound is here, the lower bound here, and the mid bound is here. On the short-term trend oscillator, it as well gives you a measure of volatility. So it forms channels. The oscillator itself will form channels. You can see the channel was wide here. It starts to narrow here in relationship to this. And then it narrows down even more right here. And you can see that congestion here and that consolidation here and the lack of volatility. Well, this is showing you that lack of volatility. In fact, if the volatility gets too low, all three of the lines, the upper bound, the pullback line, and the lower bound, will all turn yellow. When they all turn yellow, that's just a sign to walk away. Don't trade during that period. Wait till it breaks out of that. Now, we haven't seen that for a while, but this is, coming close to it, and this is how it happens. It goes from a wide range to a narrower range to less volatility. And then if it would have stepped down one more time to less volatility, all three would have been yellow, and you would have just stepped away. You wouldn't have followed your discretionary indicators. You wouldn't have looked at the trend. You wouldn't have looked at anything. You would just walk away until that volatility returned, that it made it enough to be profitable, and you could get good reads off of it. So that's it for today. Again, this is the chart on the S&P Mini for June 4th. And if you want to get them daily, subscribe. And if you want to see what the process trading .com rate ad system is all about, go over to processtrading.com, and there's plenty of videos and other dialogue over there to help you understand it. If you have any questions about it or have any questions on the daily setups, well, over on processtrading.com, at the bottom of the page, there is a contact form. You just put in your email and ask your question or leave a comment, and we'll get back to you. So hope for the rest of the week your trading goes really well, and I'll see you on the next video.